This video has been brought to you by the Ethical Standards Board of ICAI on FAQs on communication and changes in professional appointments. Starting with the first FAQ, how is the Volume 1 of the Code of Ethics structured? The answer is, the Volume 1 of the Revised Code of Ethics contains sections which address specific topics. Some sections contain subsections dealing with specific aspects of those topics. Each section of the code is structured, where appropriate, as follows. First is Introduction. It sets out the subject matter addressed and introduces the requirements and application material in the context of the conceptual framework. Second is Requirements, designated by the letter R, and in most cases include the word shall. The word shall in the code imposes an obligation on the professional accountant or the firm to comply with the specific provisions in which the shall has been used. The third is the application material. Designated by the letter A, it provides the context, explanations, suggestions for actions or matters to consider, illustration, and other guidance to assist in complying with the requirements. The requirements and application material are to be read and applied with the objective of complying with the fundamental principles, applying the conceptual framework, and when performing audit, review, and other assurance engagement, being independent. FAQ number 2. How are the provisions of the Volume 1 and the Volume 2 of Code of Ethics enforceable? The answer is that the Volume 1 of the Code of Ethics has been issued as a guideline of the Council. The Volume 1 of the Revised Code of Ethics uses the word shall, requiring mandatory compliance and requirements are clearly demarcated. Accordingly, non-compliance of the same would amount to professional misconduct in terms of the provisions of Clause 1 of Part 2 of the second schedule to the Chartered Accountants Act 1949. The Volume 2 of the Code of Ethics comprises of two schedules to the Chartered Accountants Act 1949, containing clauses of professional or other misconduct along with decisions, directions, guidelines, statements, clarifications, and also interpretations of the Council on various clauses of these two schedules, non-compliance of which shall attract disciplinary proceedings against the erring member. The third FAQ is, what is the intention behind communicating with the retiring auditor? The answer is, as per the Council directions under paragraph 2.14.1.81 under clause 8 of part 1 of the first schedule to the Chartered Accountants Act 1949, appearing in volume 2 of the Code of Ethics, professional courtesy alone is not a major reason for requiring a member to communicate with the existing accountant. The underlying objective is that the member may have an opportunity to know the reasons for the change in order to be able to safeguard his own interest, the legitimate interest of the public, and the independence of the existing accountant. When making the inquiry from the retiring auditor, the one proposed to be appointed or already appointed should primarily find out whether there are any professional or other reasons why he should not accept the appointment. FAQ 4 is whether a chartered accountant in practice can accept a position as an auditor previously held by another chartered accountant without first communicating with him in writing. The answer is no. A chartered accountant in practice cannot accept a position as an auditor previously held by another chartered accountant without first communicating with him in writing. It will be a violation in Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949. Moving on to FAQ 5, whether posting of a letter under certificate of posting is sufficient to establish communication with the retiring auditor. The answer is no. A mere posting of a letter under certificate of posting is not sufficient to establish effective communication with the retiring auditor unless there is some evidence to show that the letter has, in fact, reached the person communicated with. Members should therefore communicate with the retiring auditor in such a manner as to retain in their hands positive evidence of the delivery of communication to the addressee. In the opinion of the Council, the following would, in the normal course, provide such evidence. First, communication by a letter sent through registered acknowledgement due, or second, by hand against a written acknowledgement, or third, acknowledgement of the communication from the retiring auditor's wide email address registered with the institute or his last known official email address, or fourth, the unique identification number UDIN generated on UDIN portal subject to separate guidelines to be issued by the Council in this regard. Next is FAQ 6, which asks whether a chartered accountant can accept appointment as an auditor after sending communication to the previous auditor through registered post without acknowledgement due. The answer is no. A chartered accountant cannot accept an appointment as an auditor after sending communication to the previous auditor through registered post without acknowledgement due, as this may tantamount to professional misconduct under Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949. FAQ 7. Whether communication on email would suffice the requirement of Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949. The answer is the requirement of communication under Clause 8 of Part 1 of first schedule to the Chartered Accountants Act 1949 is deemed to be complete on the delivery of the communication to the retiring auditor. Accordingly, members are required to communicate in such a manner as to retain in their hands a positive evidence of the delivery of the communication to the addressee. With regards to the communication through email, the communication would be deemed as complete on receipt of acknowledgement from the retiring auditor's email address registered with the institute or his last known official email address. Next is the 8th FAQ. Has the communication via email replaced the other modes of communication? The answer is no. The earlier modes of communication continue to be valid. The communication via email is only an additional alternative mode of communication. Moving on to FAQ number 9. How can the incoming auditor know the email ID of the retiring auditor? The answer is that the incoming auditor may seek the email ID from the retiring auditor on phone or from the client. Next is the 10th FAQ. Which of the two mail IDs registered with the institute or last known official ID is preferable for communication? The answer is that the member may communicate on either of the two. There is no order of the preference. Moving on with the 11th FAQ, it asks whether the communication on email would be valid only where post offices or offices of the CA firms are not open. The answer is no. The member may use the optional email irrespective of opening of the post offices or the offices of CA firm. Moving on to FAQ number 12. What will be the position if the incoming auditor sends an email, however, does not receive an acknowledgement from the retiring auditor? The answer is, in such a situation, it would not be reckoned as a valid communication, as the positive evidence of delivery is not available. The next FAQ is the 13th. It asks, what kind of acknowledgement from the retiring auditor will be deemed as valid to qualify for positive evidence of delivery? The answer is any kind of acknowledgement would be deemed as positive evidence of delivery. Example, writing OK, received, etc. Next is FAQ number 14. It asks whether the incoming auditor can send request for acknowledgement of receipt of communication from the retiring auditor. The answer is yes. The incoming auditor can send request for acknowledgement of receipt of the communication from the retiring auditor. However, it would be deemed as positive evidence of delivery only if the retiring auditor accepts the request and sends the acknowledgement. Moving on to FAQ number 15. It asks whether the incoming auditor may commence the audit immediately after receiving acknowledgement from the retiring auditor. The answer is, as the communication through email is instant, the receipt of acknowledgement will be valid proof of delivery as well as entitlement to acceptance of the audit, unless, of course, the retiring auditor has raised some objections to such change. Moving on to FAQ number 16. Whether a member of the institute will be deemed to be guilty of professional misconduct if he accepts his appointment as an auditor immediately after intimating his appointment over the phone to the previous auditor? The answer is yes. The member would be held guilty of professional misconduct for the following reasons: that he has failed to communicate with the retiring auditor in writing and that he did not wait for a reasonable length of time for a reply to be received from him. The 17th FAQ asks whether the communication with the retiring auditor is also permissible via SMS or messaging application. The answer is no. Communication via SMS or messaging application is not permissible as an evidence of communication being sent as required under Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949. FAQ 18 asks, in case of appointments done by government entities, companies, banks, or their branches, the time of acceptance of audit is sometimes so little that there is no time to wait for the reply of the retiring auditor. What should be the recourse in such case? The answer is, in case the time schedule given for the assignment is such that there is no time to wait for the reply from the retiring auditor, the incoming auditor may give a conditional acceptance of the appointment and commence the work which needs to be attended to immediately after he has sent the communication to the retiring auditor in accordance with this clause. In his acceptance letter, he should make it clear to the client that his acceptance of appointment is subject to the professional objections, if any, from the retiring auditor, and that he will decide about his final acceptance after taking into account the information received from the retiring auditor. Next is FAQ 19. It asks, who is the previous auditor or retiring auditor for the purpose of communication to be made in terms of Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949? The answer is, the term previous auditor or the retiring auditor refers to the immediately preceding auditor who held the same or similar assignment comprising same or similar scope of work. Moving on to FAQ number 20. Whether communication by the incoming auditor is mandatory with the previous auditor in respect of various audit assignments like concurrent audit, revenue audit, tax audit, and special audits, etc. The answer is yes. The requirement for communicating with the previous auditor would apply to all types of audit, with the statutory audit, tax audit, GST audit, internal audit, concurrent audit, or any other kind of audit. The Council has laid down detailed guidelines in this regard, and the same are appearing in paragraph 2.14.1.8, clause number 14, to 2.14.1.8, clause number 17, under the clause 8 of the Part 1 of the first schedule to the Chartered Accountants Act 1949, appearing in the Volume 2 of the Code of Ethics. However, in case of assignments done by other professionals not being chartered accountants, it would also be a healthy practice to communicate. Next is FAQ number 21. It asks whether communication with the previous auditor is necessary in case of appointment as statutory auditor by nationalized and other banks. The answer is yes. Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949 is equally applicable in case of nationalized and other banks and also to the government agencies. FAQ number 22. Whether a chartered accountant who is appointed as the tax auditor for the purpose of conducting special audit under the Income Tax Act by the IT authorities is required to communicate with the statutory auditor? The answer is yes. The Council direction mentioned under Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949, appearing in Volume 2 of the Code of Ethics, prescribes that it would be a healthy practice if a tax auditor appointed for conducting special audit under the Income Tax Act 1961 communicates with the member who has conducted the statutory or tax audit. FAQ number 23 asks, what are the professional reasons for not accepting an audit? The answer is, the professional reasons for not accepting an audit are non-compliance of the provisions of the Companies Act as mentioned in Clause 9 of Part 1 of the first schedule to the Chartered Accountants Act 1949, non-payment of undisputed audit fees by the auditee other than in case of sick units, and issuance of a qualified report. In the first two cases, an auditor who accepts the audit would be guilty of professional misconduct. In the last case, however, he may accept the audit if he is satisfied that the attitude of the retiring auditor was not proper and justified. If, on the other hand, he feels that the retiring auditor had qualified the report for good and valid reasons, he should refuse to accept the audit. Next is FAQ number 24. Whether the chartered accountant in practice can accept the audit in case the audit fee of the previous auditor remains unpaid. The answer is no. In case the undisputed audit fee for carrying out the statutory audit under the Companies Act or various other statutes have not been paid, the incoming auditor should not accept the appointment unless such fees are paid. In respect of other dues, the incoming auditor should appropriate circumstances, use his influence in favor of his predecessor to have the dispute as regards the fees settled. The Council has taken the view that the provisions of audit fee made in accounts signed by both the auditor and the auditee, along with other expenses, if any, incurred by the auditor in connection with the audit, shall be considered as undisputed audit fees. The next FAQ is the 25th FAQ. Whether a chartered accountant can accept an appointment as an auditor of a company without first ascertaining from it whether the requirements of the Companies Act in respect of such appointments have been duly complied with. The answer is no. A chartered accountant in practice shall be deemed to be guilty of professional misconduct if he accepts an appointment as an auditor of a company without first ascertaining from it whether the requirements of Section 139 and 140 of the Companies Act 2013 in respect of such appointment have been duly complied with. In this regard, the Council has laid down detailed guidelines that are appearing in paragraph 2.14.1.9 clause 2 to 2.14.1.9 clause 39 under the clause 9 of the part 1 of the first schedule to the Chartered Accountants Act 1949 appearing in the volume 2 of the Code of Ethics. Moving on to FAQ 26. Whether a statutory auditor of a company can be appointed in the adjourned meeting in place of existing auditor where no special notice for removal or replacement of the retiring auditor is received at the time of the original meeting. The answer is no. If any annual general meeting is adjourned without appointing an auditor, no special notice for removal or replacement of the retiring auditor received after the adjournment can be taken note of and acted upon by the company, since, in terms of Section 115 of the Companies Act 2013, special notice should be given to the company at least 14 clear days before the meeting in which the subject matter of the notice is to be considered. The meeting contemplated in Section 115 undoubtedly is the original meeting. Further, where at any annual general meeting no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company mentioned in Section 139. Next is FAQ 27. Can a company remove the auditor before expiry of his term? The answer is yes. The company can remove the auditor appointed under Section 139 before the expiry of his term of office only by a resolution passed at a general meeting after obtaining previous approval of the central government. Moving on to FAQ 28. What would be the recourse taken by the incoming auditor in case of a qualified audit report by the retiring auditor? The answer is that the incoming auditor may accept the audit if he is satisfied that the attitude of the retiring auditor was not proper and justified. If, on the other hand, he feels that the retiring auditor had qualified the report for good and valid reasons, he should refuse to accept the audit. There is no rule, written or unwritten, which would prevent an auditor from accepting an appointment offered to him in these circumstances. However, before accepting the audit, he should ascertain the full facts of the case, for nothing will bring the profession to disrepute so much as the knowledge amongst the public that if an auditor is found to be inconvenient by the client, he can readily be replaced by another who would not displease the client, and this point cannot be too overemphasized. FAQ 29 asks, what are the duties of the retiring auditor? The answer is, on the request of the incoming auditor to the retiring auditor for providing known information regarding any facts or other information of which, in the opinion of the retiring auditor, the incoming auditor needs to be aware before deciding whether to accept the engagement, the retiring auditor shall provide the information diligently. Further, the paragraph 320.8 in Volume 1 of the Code of Ethics provides that subject to the provisions of Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949 and the Council directions thereunder, the existing or predecessor accountant, when asked to respond a communication from a proposed accountant, shall provide the information honestly and unambiguously to the proposed accountant. FAQ 30 relates to whether there are any Know Your Client or KYC norms to be followed by the members in practice. The answer is yes. Members in practice are required to follow Know Your Client or KYC norms, which are mandatory with effect from 1st January 2017. These are applicable for all attest functions. Attest functions for this purpose include services pertaining to audit, review, agreed upon procedures, and compilation of financial statements. The KYC norms may be accessible from paragraph R320.3A6 of Volume 1 of the Code of Ethics. FAQ 31. What are the requirements of communicating with the existing or predecessor accountant except in case of audit, review, report, or any other assignment, as may be prescribed by ICAI from time to time and governed with the provisions of Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949 and the Council directions thereunder? The answer is, as per paragraph 320.5 of Volume 1 of the Code of Ethics, in the above circumstances, the proposed accountant will usually need client's permission, preferably in writing, to initiate discussions with the existing or predecessor accountant. And as per the requirement imposed under paragraph R320.6, if he is unable to communicate with the existing or predecessor accountant, the proposed accountant shall take other reasonable steps to obtain information about any possible threats. Moving to FAQ number 32, whether the auditor should periodically review whether to continue with the recurring client engagement, the answer is, as per subsection R320.9 of Volume 1 of the Code of Ethics, for a recurring client engagement, a professional accountant shall periodically review whether to continue with the engagement. In view of the paragraph 320.9A1, potential threats to compliance with the fundamental principles might be created after acceptance which, had they been known earlier, would have caused the professional accountant to decline the engagement. For example, a self-interest threat to compliance with the principle of integrity might be created by improper earnings management or balance sheet valuations. Let's now move to FAQ 33. In which circumstances should a professional accountant not accept an engagement? The answer is, as per subsection 320.4 of Volume 1 of the Code of Ethics, there might be reasons for not accepting an engagement. One such reason might be if a threat created by facts and circumstances cannot be addressed by applying safeguards. For example, there might be a self-interest threat to compliance with the principle of professional competence and due care if a professional accountant accepts the engagement before knowing all the relevant facts. If a professional accountant is asked to undertake a work that is complementary or additional to the work of an existing or predecessor accountant, a self-interest threat to the compliance with the principle of professional competence and due care might be created, for example, as a result of incomplete information. A factor that is relevant in evaluating the level of such a threat is whether tenders state that, before accepting the engagement, contact with the existing or predecessor accountant will be requested. This contact gives the proposed accountant the opportunity to inquire whether there are any reasons why the engagement should not be accepted. Finally, FAQ 34 asks, what are the examples of actions that might be safeguards to address a self-interest threat before acceptance of appointment of a particular engagement? The following include the examples of actions that might be safeguards to address such a self-interest threat. First, asking the existing or predecessor accountant to provide any known information of which, in the existing or predecessor accountant's opinion, the proposed accountant needs to be aware before deciding whether to accept the engagement. For example, inquiry might reveal previously undisclosed pertinent facts and might indicate disagreements with the existing or predecessor accountant that might influence their decision to accept the appointment. Second, obtaining information from other sources, such as through inquiries of third parties or background investigations regarding senior management or those charged with governance of the client. With this, we come to an end to our presentation. Thank you.